is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hi, and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with co-host Andrew Young. It's been a very eventful past few weeks. We thought it would be helpful for our audience to just sit down and chat about some of the big things that have gone on in the world. So starting first on the home front, we saw that Bitcoin and cryptocurrencies are in the spotlight once again for their role in being used as a funding tool for the Freedom Convoy protests, which have been quite divisive here in Canada. On the other side of the world, Russia has just invaded the Ukraine, which has caused a broad-based sort of sell-off in risk assets, but we think has some broader implications for the role of Bitcoin and crypto assets in the global economy. And then finally, the U.S. is preparing an executive action to regulate the crypto industry. And at the same time, we see India, the largest crypto asset market in the world, actually by users at around 100 million, taking steps to legalize it and regulate it as well. So we're going to talk a little bit about the global regulatory landscape and what that means for the technology, for the price, for the market, for everything else. So with that, Andrew, let's kick things off. You've been doing a lot of work looking at what's going on the home front here in Canada. So I think a lot of people are probably familiar with what's going on at a high level, but let's talk about how this impacts cryptocurrencies.
Yeah, exactly. With the Canadian Freedom Convoy protest, it's been a major topic of discussion across the entire crypto Twitter sphere, not just Canada, and something that a lot of people have sort of brought up to me personally in my calls. And so, yeah, especially because we're obviously Canadian. So it's been very interesting. I think the biggest thing about the Freedom Convoy protest, and I think it's actually potentially one of the biggest potential catalysts for crypto adoption in Canada, is as everyone knows, the Liberal government invoked this thing called the Emergency Act, which essentially gives the federal government the ability to both crack down on the protests and sort of remove protesters from the area, but more importantly to us, it actually allows the federal government to sort of freeze assets through the banking system of people associated with the protest, as well as even people who donated money to the protest. And as of now, the official number is that about more than 76, they haven't actually given us a number yet, but more than 76 accounts have been frozen, representing about $4 million in total assets. So typically an average bank account size of about 50 grand. And essentially what that means is their assets are frozen and they can't use them to sort of pay for the mortgages. I believe there's also been sort of some other financial assets that have been frozen, things like insurance being revoked. And without getting sort of into the nitty-gritty details, what's interesting about this is one of the fundamental properties of crypto assets is that it is censorship resistant, and essentially are assets that aren't, at least theoretically, can't be seized by government entities. And so I think what's interesting is, for the most part, when you tell people in the West about that sort of characteristic of it, their eyes kind of glaze over because, hey, like I don't live in Venezuela or Argentina where sort of there's deterioration, or like the assets, obviously those currencies tend to sort of have been inflated away and have lost a ton of value. I live in a country where I sort of believe in my, you know what I mean? Things like that. And so what's interesting is it's, at least for a certain segment of the population, it's actually sort of galvanized interest in crypto assets, because that sort of seizure resistant property is now potentially attractive. And so, yeah, I mean, I'm curious to hear your sort of take on it, but for me, it's for a certain segment of the population, it's definitely increased the attractiveness of crypto assets. It's also increased the attractiveness of self-custody and sort of decentralized exchanges, because part of the act is that centralized custodial crypto exchanges have to obviously comply with this as well. and so you don't actually benefit from this property of crypto assets with something like CoinSquare or custodial crypto exchanges.
Yeah.
And so I'm curious to hear your take, but from sort of my talking to different people, it has been both something that it's sort of scared a lot of people, but then also has led to sort of a renewed interest in crypto assets.
Yeah, so I have a lot of thoughts on this, and this isn't a politics podcast. We want to stick to the crypto side of things. You can debate whether the Emergencies Act was justified in this case, but I think what it did do is it thrust Bitcoin into the spotlight, and it actually did that before the Emergencies Act was even implemented. During the protest itself, a lot of the people who tried to fund this movement were using centralized crowdfunding platforms, which were shut down. Because they didn't want to be associated with this. And so people turned to Bitcoin as a way to fund these protests. And I think it's important to understand that crypto assets like Bitcoin are permissionless open source technologies, not unlike email. Email can be used by anyone, including those that you disagree with. And it doesn't make email or Bitcoin bad, right? And while many people agree with the actions of these protesters, and even more people disagree with the actions of these protesters, that doesn't actually have any bearing on the moral value of Bitcoin. If anything, it only highlights the fact that if anybody can use it, that means that people who are disenfranchised or out of luck or unable to spend money can do so as well. And that's why Bitcoin's also used by freedom fighters and by anti-government protests in Hong Kong and by women in Afghanistan who can't access foreign aid because of US sanctions, right? So there's all these things that just need to be clarified, that this is not something that we should be focused on crypto specifically. The other part of this that I find really interesting is the cooling effect that this might have on innovation in Canada. One of the unintended consequences of this, of trying to regulate a new industry using an emergency as the basis for that, is that it could have long-term and unintended consequences. And you have actually an amazing anecdote, which I think you should share with the audience, that I really highlights this, about someone who was looking to get a job in this industry. What was that, Andrew?
Yeah, it was super interesting. Someone we were talking to had sort of concerns about joining the crypto industry, just given all of this sort of talk and all of this stuff about obviously crypto people tend to be more worried about things like that, and actually led to someone sort of declining a role because of it, which is very interesting. And I think that's exactly what you said. I think it's going to lead to sort of a cooling effect on domestic Canadian companies, given that, you actually had a great podcast on this, so I'd actually want to ask you more about it. But given the fact that these regulations are sort of, at least on the crypto asset side, are sort of being implemented very quickly, without the same sort of rigor that we'd like to see, given the fact that this industry is incredibly new. It's very difficult to create regulations for it. So in a lot of ways, I sort of sympathize with regulators, because you're trying to regulate an industry that is literally changing by the second, and there's new startups every single week. And it's not really yet at the stage where it's mature enough that it has a huge impact on the economy, at least yet. I think it will in the next probably 5 to 10 years.
Yep.
And so it's tough, because you have to sort of balance these sort of the concerns that we talked about with the Freedom Convoy protests and stuff like that, with the fact that you don't want to sort of stifle this fast growing new sector. I'm curious to see, though, because you sort of talked a lot about this, and you had a take on the policies as well. I'm curious what you think.
Yeah, well, like any policy that should be implemented to regulate or govern a new industry should be thoughtful. There should be a thoughtful, deliberative exercise where there's debate, there's input from different stakeholders, including and especially from industry and entrepreneurs. And after that process, there is a vote in Parliament or in Congress that leads to the creation of a new law, which provides clarity. And that's not what's happening here. And, I think that the government's response, as it relates to crypto, betrays a lack of understanding about this asset class and this industry. And I think that's actually something that's really concerning. So it's true that they're saying, centralized crypto exchanges and custodians ought to be treated like other centralized intermediaries. And I actually agree with that completely. They should be regulated in a similar way. But they're now asking that software developers who create non-custodial wallets to provide information about their customers, which is ridiculous. That's like going to the Gap and asking them to provide information about how people are spending money just because they bought a wallet at the Gap and provided their email. Like the company that sold you the wallet that allows you to put the money in it to go fund the Freedom Convoy protests, they're not responsible for how that money is spent, nor do they have any obligation to keep any records of the people who use that. In fact, that's sort of the point. So it just shows a fundamental ignorance about how this all works. And if I'm in the industry here in Canada, and putting aside the justification for the act, the government's showing its hand that actually it doesn't really know much about this, or at least it's choosing not to acknowledge these limitations. And that's concerning to me because in the long haul, as we are thinking about how to create lasting, durable regulatory framework to help a new industry grow, we may be stuck for a really long time with the legacy of an action taken during an emergency or during an acute specific time. And I think that's something that could be really, really damaging for this industry. So I am very concerned about that. And I hope that when this is over, we will all gather together to have those conversations. My concern is that certain emergency powers, once implemented, are very hard to reverse, and that's not a controversial thing. That's been true throughout history. It's like a catcher's mitt. You put a bigger hand into a catcher's mitt, and you remove the hand, you remove that emergency power, but the mitt is still bigger. Like the size and scope of the government and the law is still larger than it was before, and that's something that is hard to shrink. It's hard to get it back to the size that it was. So I do worry that even after the calm, there's calm after the storm and what have you, that we're still left with this legacy.
Yeah, I totally agree. I think one thing that's interesting is I think it will also help accelerate the push for, I think like one of the other implications is it's going to accelerate the push for CBDCs, central bank digital currencies.
Yeah.
Because cash, whether you sort of use crypto or not, crypto is completely traceable. It's actually not the best sort of tool, in my opinion, for sending money to these protesters. So the best tool is cash because it's completely untraceable.
Well, I want to make a distinction because, sorry to interrupt, Andrew, but it's one thing to use money to fund illegal activity. It's quite another to use money to fund something that is considered unsavory or disagreeable to some people, right? Like, we are not advocating that people use Bitcoin to commit crimes, obviously. But there are plenty of examples where it's very difficult for businesses or for certain causes to get access to traditional financial rails. And so it's less about seizure resistance as it is to me, at least, it's about financial deplatforming, where there's still a way for people to fund lawful enterprise and lawful causes that maybe not everyone agrees with. And by the way, like that doesn't necessarily mean right wing, left wing, up or down. It just means things that are on the margins, and it's people on the margins that we have to think about as well. So I just wanted to clarify that.
Yeah, no, that's good clarification. But I think my other sort of second big takeaway or prediction from this is that I think it's going to accelerate the development of the CBDCs, which are actually even easier to they're even easier for federal government to sort of, with the push of a button, sort of seize assets and stuff like that. And it's also, and I think that will coincide with the elimination of cash, or at least a strong push to eliminate physical cash, because then essentially the entire system is digital and sort of controlled on one ledger. And I think, and part of the reason why is that you can have, there's more control. You can also have things like negative interest rates, which aren't possible in the current sort of economy because people can take their money out of their bank and into cash and stuff it under the mattress. In a cashless society with sort of CBDC, you could actually impose negative interest rates to stimulate the economy and things like that, which may not actually be politically. A lot of people are unlikely to like sort of negative interest rates, but
it creates an incentive to, like, if inflation's an incentive, then that's a major incentive to spend money and stimulate the economy.
It's like a macroeconomics dream tool. You can also have like stimulus checks that are programmed such that they can only be spent on certain goods or within a certain period of time. And I think that will be CBDCs. I think it's tough to sort of predict their impact, but I think this is going to at least increase sort of the political will for them because it allows even more control. And there's a lot of sort of, it's tough to sort of parse whether CBDCs are good for crypto or bad. In one sense, they're sort of bad for crypto assets because you have sort of government issued stablecoins, which are going to be easier to use. And so therefore there's sort of potentially less demand for things like Bitcoin.
Yeah.
But at the same time,
I have a different opinion than that.
Yeah. So then there's a second opinion, which is probably the same one you share, which is it increases the need for sort of non-state issued assets like crypto, like Bitcoin.
Yeah, there's lots of ways to spend dollars digitally already. So I don't know what impact this would have on Bitcoin. If anything, if you look at the growth of private sector stablecoins, they're a payment rail that allows you to access digital assets more easily. And unless a CBDC was programmed to forbid you from buying other crypto, which who knows, it's up to how it's designed, then I think it's probably pretty benign, or it's just another payment rail. On the topic of CBDCs and Bitcoin and monetary regimes and regimes in general, Russia just invaded Ukraine, which is obviously a tragic and terrible thing. And it's created a pretty swift response so far from the U.S. and its allies. One of the tools that the U.S. government uses is financial sanctions, and specifically cutting off U.S. dollar payment systems like SWIFT from what it views as bad actors. In this case, obviously, it is a bad actor. And I don't know if I'm if I'm reading the situation too closely, but in the last few weeks, Vladimir Putin has softened his stance as it relates to Bitcoin and become closer to China, which is got its own big CBDC project. And I wonder if, reading between the lines here, if there's something that's going to accelerate a de-dollarization in Russia and what that means for the broader crypto market. At least right now, risk off means that most crypto assets are down, right? That's the obvious response from the market. There's risk in the market, oil's up because they're worried about pipelines getting disrupted, stocks and other risk assets are down. Well, long term, what do you think this could mean?
It's really tough to know. So I think what the Russia situation is really interesting because Russia was on the verge of completely banning Bitcoin and Bitcoin mining and crypto assets in general before sort of an 11th hour change to actually not ban it and in some ways welcome it. And so it's very tough to sort of know what's going on there. It kind of reminds me of what was happening with China over the last 5 years until they sort of just fully banned it, which was that they kept banning it and then sort of walking back the ban a little bit and then re-banning it. I think Russia will probably have the same sort of situation. And the reason why is crypto allows people to evade capital controls and sort of financial repression, which could lead to a flight of capital in countries like Russia and China, where people want to get their assets out of the local currency or the local stock markets and into something that is both sort of seizure resistant, but then also not sort of custodied in their own control and not custodied under the state's control. So I think long term, it's more likely that that's what's going to happen with Russia, just because the benefits of this alternative system, in my view, are less than the drawbacks of allowing people like their domestic citizens to sort of cash out assets.
That's interesting. Yeah, that's sort of a contrarian take because the narrative is that maybe Putin's changing his view as it relates to Bitcoin because he views it as an alternate system to the US. But that's cuts both ways, as you point out. The one thing I wonder about is like in China, wealth is definitely concentrated at the top, but there's plenty of people in China who have lots of money, and there are plenty of people who have like quite a bit of money. Whereas in Russia, like the Gini coefficient, which is the measure of like, how unequal a society is, I think it's the most unequal of any large economy. And so basically like it's all just a bunch of oligarchs who own most of the economy anyway. And they've already got most of their money out, and it's in European football clubs and London townhouses and US stock markets and this other stuff. So I don't know what money is Bitcoin. Bitcoin sort of feels like a tool for the little guy, less so for the oligarch. I don't know.
Potentially, but actually, one thing that could happen is obviously with these sanctions and stuff like that, you could see an acceleration where
Good point.
it becomes increasingly harder for these sort of the Russian oligarchs, as you call them, to get their money out of Russia into sort of UK townhouses. I actually saw that Boris Johnson, the UK Prime Minister, just imposed some sanctions. And I think that's going to continue to accelerate. In which case, Bitcoin is actually sort of an alternative off ramp for these guys to get their money out, which could then provoke a response from the government to sort of ban it, to prevent that capital flight. So it's tough to know. I mean, I'm not an expert on sort of Russian politics and geopolitics, but I do think Russia will probably end up going the way of sort of China in terms of having this on again, off again relationship with crypto assets.
Yeah. Which, by the way, doesn't, apparently Russians own a lot of crypto assets. I think there was an estimate that it's like $200 billion. So you might think, oh no, we're cutting off a big market. And that's true. But, at the same time, the westernization of Bitcoin that's occurred over the last year or so, I think broadly speaking is a very good thing. And what I'm referring to specifically is that this time last year, over 50% of all Bitcoin mining was in China, and today it's 0%. And over 50% of Bitcoin mining is in Canada and the US combined, whereas a year ago, I don't know what the number was, but it was in like the teens combined. So all of a sudden, the thesis that Bitcoin is a tool that's used by despots, or that's a Chinese scheme or whatever, they all got thrown up. All those conspiracy theories got thrown out the window. We have this industry that's very Americanized now, and I think like overall that's a really good development. And so it wouldn't totally surprise me if this were to occur, this thing that you're describing, which is that at first it's okay, but you know what, when you realize that it's a way to get around an authoritarian government, maybe they crack down once again. Who knows? So speaking of government regulations, because that's where we're kind of taking this conversation, there's been a bunch of news over the last little while about government regulations. I think probably the biggest one was in India. Now, it's not like the government in India provided some full-throated endorsement for crypto, but they did. We did avoid the worst case scenario, which is that they didn't decide to ban it. They decided to regulate and tax it. I was actually over in the Middle East speaking with an Indian banker, and he basically said, it's not totally surprising when an industry gets big enough. The government just wants its piece of the pie, essentially. So anyway, notwithstanding their motives for it, it's a good thing, right? It means all of a sudden there's maybe a bit more clarity for a very big market. When do you think that'll start to impact the markets, if at all?
Yeah, I'm extremely bullish on India, and particularly sort of crypto ecosystems in India. It has a massive population that is actually quite technically savvy, English speaking, and some of the biggest projects in the whole crypto ecosystem, like Polygon, are from there. And I think Polygon particularly, so Polygon used to be called Matic. We sort of talk about Polygon a lot. They're the dominant in terms of adoption and sort of assets under TVL, the dominant Ethereum layer 2 scalability solution. They actually just announced a $450 million raise as well from some of the top crypto VCs in the world. And I believe it's trading at kind of a $15 to $20 billion fully diluted valuation. So it's it's been a huge success. And I think one of the things that was interesting with Polygon was that it was, in my view, severely undervalued for a while. partly because it was sort of this team out of India that people hadn't sort of seen. But I think by their success has sort of galvanized a lot of interest into the Indian crypto ecosystem. And I think it would be a shame if the government sort of regulated or tried to sort of regulate the industry out of existence, given that it has the potential to be one of the major epicenters of crypto development in the world, particularly in sort of the East. So yeah.
Well, not only that, just on Polygon and Sandeep, it's not only job creation and innovation in the private sector. His initiative to raise money for humanitarian aid in India raised over $1 billion in crypto donations, I think. And that's sort of, what more evidence do you need that there's huge benefit to embracing this stuff? Imagine if people were prevented from owning cryptos, or that organization couldn't disperse those funds. What would the point of all that be? So yeah, I think it's really interesting. Another big economy that we're watching, the United States, is also expected to release, this little country we know about, that is expected to release some of its own new rules potentially around crypto. This was made a big headlines back in January. There was this talk of an executive order. We actually covered it quite extensively in the newsletter. I think the thing that got people quite spooked was a Barron's article that quoted a source saying that the order would be done under the guise of national security. And what we wrote at the time was, crypto assets and blockchain are a matter of national security, but not because of the straw man argument that criminals will use it or that it uses too much energy, because those two things are actually easily disproven, but because the underlying technology is the basis for a new industry that could create a lot of wealth and jobs and put the US on a firmer footing for this next era of the digital age. So it is a matter of national security, just for reasons that the government's maybe not fully understanding. But recently, and I don't want to read too deep into the, reading between the lines, but the government seems to have softened its tone a little bit. Apparently, there's a bit of a disagreement between the Treasury Department and the White House, where the Treasury Department says, we've already got a bunch of rules. Why do we need to create new ones? It's duplicative. And since that's come out, the US has changed its tone from new rules to new studies. It's all about how the White House is going to task a bunch of different agencies to study the problem, or study the issue, or study the matter at hand. And that's always a good sign. It's basically just kicking the can down the road. So it's not to say that, again, that regulations are bad. In fact, what we've said many times before, that clear, simple to understand rules can be the basis to actually grow an industry, because it gives people confidence and comfort and creates opportunities for investment and so forth. But if you regulate too quickly, or you impose rules before an industry's matured enough, then that can have a negative impact. So I think we actually could be in for an upside surprise. Mark it in your calendars, the first week of March, that the executive order ends up being a giant nothing burger. That's my prediction. We'll see how things play out.
Yeah, I think that's a very solid prediction. I think there was a lot of hysteria around this in January, like you mentioned, and as sort of more information's come out, it does seem more and more sort of like you said, more of like an information gathering type executive order. It seems like it's just getting pretty much all the major regulators, so SEC, CFTC, Treasury Department, to sort of work together and put together some implications of crypto assets. And so, yeah, I think, I think there's a lot of potential upside, I think, on the U.S. regulatory front. I think a lot of the downside's been priced in, and so if at this point, I guess it could obviously get worse. Like, there could be more sort of restrictions coming out, but I do think, like you said, there's sort of more upside than downside, especially as we go into midterms and crypto has become more and more sort of an issue that voters
really,
really,
issue too, right?
Yeah,
it's part of, like, which I don't personally understand. I can talk about that in a sec, but it's, the government's already, it looks like the Democrats are in for a drubbing, like a beatdown in the fall. So they don't want to do anything that they shouldn't, at least try do anything that's going to isolate a block of well-organized, well-funded, and quite a large size of voters, right? That's something they should tread carefully around.
Yeah, and one thing that's been really interesting to sort of see, and I'm sort of understand it more and more, is that the crypto industry and crypto movement should really be seen as a political movement. And what I mean by that is there is a ton of people where crypto is the most important sort of issue to them.
Yeah.
Ryan Selkis, who we had
Or the
on,
only issue.
yeah, exactly. Ryan Selkis, who we had on the podcast in December, right before the end of the year, is one of those guys. He's been sort of leading the charge. If you sort of follow his Twitter account, you see him very supportive of it. And he kind of considers himself neither right or left, but he's pro crypto. And I think there's a lot of people like that. And so, I mean, we'll see what happens because the midterms are coming up in, I believe, about 7 months from now.
Yeah, November.
Yeah. So, I mean, I don't know. What do you think about that? Like, I think there's the political power of the crypto movement is definitely growing. And I think people are starting to realize how much people in this movement actually care about crypto. Like, it is, in a lot of ways, their single defining sort of characteristic.
I think any political party that vilifies crypto is writing their own death warrant. And there's a bunch of reasons for that. So the biggest block of voters in the United States and Canada too are millennials and Gen Z combined, right? And if you look at the level of interest that generation has in crypto and also the ownership, it's way higher than it is for other demographics like Gen X or baby boomers or people who are much older than that, obviously. And so this is an issue that affects actually quite a few people. I read a study that a survey that 60% of millennials that make over $100,000 a year are invested in crypto. Now, that's probably still a minority of the population, obviously, but it's still a big block. You know, it's not 60% of people with $1 million or $10 million. You know, there's plenty of young professional people in big cities and other swing state areas that own crypto, right? So why isolate or alienate that group of voters? Now, not everyone is a single issue voter. That's probably a small group, but it's still an issue, and it's probably an issue that they care about. And then the other thing is, I don't totally get why crypto needs to be a partisan issue. I actually think that there's something to like for people on the left and the right. You know, on the right, this is a way to be your own bank, to, you know, not worry about being financially deplatformed, to wrest some control away from government, to, you know, have more autonomy and freedom. And on the left, are you sick and tired of big banks and other companies' invested interests, like keeping the little guy down, preventing people of color from starting businesses or getting access to banking, preventing, you know, small companies and individuals from getting access to financial services? Well, all of a sudden, there's this technology that allows you to stick it to the big banks. So, you know, Elizabeth Warren hates crypto, but I just think she assumes that if it's not the government that's doing it, then it must be bad, right? Her solution to everything is just for the government to get involved. Well, maybe there's something else. Maybe we're at the brink of, you know, a new era of innovation, and that's something that should be embraced by people on both sides of the spectrum, because it shouldn't be a partisan issue. It is, in my mind, a progressive issue in the sense that it means economic progress, not social liberal progress, but economic progress. And I think that's something that everyone should get behind. And to their credit, there are people on both sides of the spectrum that are really interested in this technology and this asset class and are taking concrete steps to try and advance the industry. But it's pretty clear at this point that it has a rightward bias, which I think is unfortunate, because I think this could be a big bipartisan issue if people do their homework and understand what it means for the world. So I'm just looking at the clock. That's been a pretty good chat, Andrew. We could go on, I'm sure, but we've covered sort of 3 or 4 of the big things that people are talking about right now. Probably in a week's time, every one of these things will be different. Hopefully this Emergencies Act has been revoked because there's no emergency. Hopefully Putin has chickened out and he's gotten out of the Ukraine. And hopefully the U.S. regulations turn out to be nothing too damaging. But I'm not holding out too much hope for any of those things at this point, but I will remain optimistic, as I always am. Anything else to conclude?
No, I had one last quick tidbit, which was kind of funny. I've noticed a ton of people on my Twitter sphere who are sort of live in San Francisco, very progressive, and they're in this weird position where they're sort of giving props to guys like Ted Cruz, who have actually turned out to be very pro crypto. And it's always the same sort of tweet. It's like, I can't believe I'm doing this, but I have to give props to Ted Cruz for because he's doing this big thing right now with Bitcoin mining and trying to encourage it. So it's definitely something where I just want to hammer. I think it transcends sort of the traditional left right, and for people who are very interested in sort of the crypto movement, crypto sort of trumps everything in their mind. But yeah.
Or at the very least, that you can find a person reprehensible for many reasons, but still work with them on an issue that advances the common good. So let's hope that that's how people think going into the rest of this year with the midterms looming. All right, Andrew, AY, great chat as always. We'll see you next week. We've got a ton of great guests lined up. Our guest for this week will be a little perturbed that they didn't get to air this Tuesday, but we'll make sure that their feelings aren't too hurt. So with that, we'll wrap it up. Thanks for joining us. We'll see you next time. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.